good day, all. Ira Epstein. I'm sitting here and laughing because as I was doing the metal report, my kitties got into a fight. They're gone now, so it's nice and quiet, but that happens. Thank God I have them because, it gets lonely as you're trading and doing all this, and it's a distraction. But this is Wednesday, and this is the 23rd of October, 2024, and the time getting on to 6:30 p.m. Central Time. And what a day. A big down day in the stock market. Is that the end of the bull market? Not at all. But for those of you that get my full research, I go back and I show you on a daily basis in the pre-election, going back 93 years, how the markets react on a day-to-day basis pre-election. You'll be shocked at the break and how that's fitting in with what this market does and the other part of it. I only use that as another tool. It is not a guide to trading. History doesn't mean this is what's going to happen in the future. If it did, we'd all be gone. You wouldn't see me because it'd be too easy to predict. There's a number of seasonal trades that have 100% reliability. You put it all on it and you discover, well, all of a sudden it's not. Maybe you're the jinx or I'm the jinx. It doesn't matter how it goes. It's a tool. And as a tool, I have paid attention for 50 years to seasonality. I believe in it. And I believe in it because there are events that make it happen. Elections are one of those events. So the mudslinging that's going on right now. I mean, out of Harris's mouth, out of Trump's mouth, every bad thing you could say about the other person's there. If it were a normal election, as this ends, they shake hands and they move on, whatever it is. Unfortunately, we're dealing with Trump, and it'll never be what you call normal. When we look at the energy markets, Anthony Blinken is back in the Middle East trying to negotiate a 6-day truce. That's the newest thing. Get some hostages released with Hamas, see what you can do. Israel, in the meantime, has taken out from Hezbollah the new leader that they were going to name. They don't have to worry about it. If you're on that list, you're marked. And that's basically what's going on. You can see that in the bonds and notes, we just continue to add yield because the market realizes that this is a spend administration. Which one? Both. Whoever wins, it's about spending. Trump's trying to pay for it with tariffs. I don't know if that works or doesn't work. I have seen both sides of that. And when people say, oh, it's not a tax on us. Nonsense. It is a tax on us if you want that good. Yes, in the schoolroom and in the perfect world, if those companies come here and buy and make the goods and then you want that identical good and you don't pay the tariff on it, you win. But in the meantime, I don't know about that. We'll see. We have a lot of earnings going on. 20% of the S&P companies are reporting. Tesla did it today. We have so many of the companies. I'm not going to go through them all, but it's all kinds of events taking place. Wild ones. Some companies moving up 10, 20%. So you've got to pay attention. It's a pretty interesting time. You're down in the Russell. You're down in the Dow. You're up in the NASDAQ and you're up in the S&P. Does it mean anything? I don't know. Do I think that the market peaked out and we're going into a bear market? Absolutely not. Do I discuss it in tonight's report, my written report for my subscribers in detail? In fact, I show you a chart going back 90 some odd years and what I think this means. The dollar, though, reigning supreme. So we seem to start off each evening where we come up a little bit, but it's been fading by the end of that day. We'll see. Eventually, patterns change. On the E-mini weekly S&P for the week, so far, we're into Thursday session. You're down 1%. Okay, doesn't look like you did a lot of damage there. You certainly look like you've put in a near-term trading top here, and you had a huge decline today on the chart, as you can see. The pattern without today, and I want to show that, was down. You had lower highs, lower lows. Got it? So today you followed through with it. Tonight you're stable so far. Where's the 18-day average? Did we not talk here, and I know we did, that if the market was going to break down, and I was just saying this to you yesterday, that maybe it'll go to the 18-day average and we'll see what it does. Now you'll say, why doesn't it just slide through there? It can, but often markets that are in a bull mode have a way of getting back to this average. They play around and then they resume that trend. Do I think that's where we're at? Yes. Do I know how deep it'll break? No, I don't care about that. What I care about is when the market's through with the break, can I catch the market for the ride back up in time? Is the market in a downtrend tonight? Well, it's neutral. If it closes under 58.3690, yeah, then it's in a downtrend because you have the swing line, the brown line with lower highs, lower lows, and you'd be under my line in the sand, the 18-day average of closes. The Bollinger Band, you know you were running it, and at the end of the day, any way you want to cut it, that did end up being the big resistance point in the market. And momentum, the slow stochastic as I measure it. Remember, my formula is different. I do give it to my paid subscribers if they want to go in and change theirs to match mine. You were embedded. When you lose it, you often go back to the 18-day average. Most of the time, it's not in the same day, but this market's been up so much that it was able to do that all at one time. In the NASDAQ, you did not embed. All you did is get overbought, fought a battle for a very brief day, 2 days at the upper band, and you fell back, and you're still fighting at the 18-day average. But now with the break today, I should have had a red arrow here. You've now got a lower low and a higher high. Certainly not an uptrend. I didn't catch it on this one either. I was hurrying because I was doing a TV interview and I wanted to get these out. But the pattern is now you'd have a red arrow at the top, and here you're out of the uptrend in all these markets at this point. This one setup is correct. Then we get over to the 10-year notes. And you fought a battle. Did I not just tell you something? And I was trying to teach as we go here. When you get this setup, here's the 18-day average rushing at the 100. When you get the crossover, often, I wish I could use the word always. It's not accurate. Often, the market will then try to make even a lower low, and that's just what the market is trying to do now. Could it get down to the Bollinger Band? It could. Does it have to? It does not. But on rallies, do I think the pros are going to sell it? Oh, yeah, I do. What about the 5-year? Same thing. Bearish crossover, new lows as this is all taking place. In the dollar index, you have another set of crossovers happening. Look at the 18 to the 100. It's just ready to do it. And then you might even get over the 200. So if the market breaks hard for whatever reason, this is a big support area, anything from 103.07, let's call it, to 102.67. And you know the target, if it can keep going up, is the upper Bollinger Band. In the eurocurrency, it's the flip-flop. First, we had the bearish crossover. You do see right here what has taken place. And again, I would have been right over here, and I know what I was saying. We got a bearish crossover. You're probably going down. Well, then if you cross the other one, that could be another element. And that's just what happened. And that's because people that watch moving averages, which are a lagging indicator. They're not a indicator that tells you what's going to happen. They tell you the lag, and then you figure out what you want to do with it. Well, they're going, I'm more bearish. In the British pound, so we're waiting to see, are they going to cut interest rates? The market keeps falling. As I said, you might get down to 128.70. I see the battleground as the green line, the 100-day average, but the trend clearly down. In Bitcoin, I can see an argument to get back down over here to the 18 and the 100-day average to regroup. In the energies, we've rallied back for a battle at the 18-day average of closes. Momentum is still down, and momentum is oversold. So I don't think you're seeing new money deployed on the short side, and I don't see any reason just yet on this chart to be friendly in any manner. I have the same thing to say in the crude over here, in the WTI, and in the heating oil. So what they've done in the energies is they've rallied back to the 18-day average to fight a battle. I'm so hoping that that happens in natural gas because I think it'll peak out there, and I think you want to be thinking the short side of natural gas again, but that's a story for another day. In the meantime, do remember we have these reports, jobless claims, the Federal Reserve National Activity Index tomorrow at 7:30. S&P Global Group's going to come out with their manufacturing and service sector PMI, so you want to take a good look at those as well. You want to, if you haven't seen our information, get going with it. Here's the way to get our free offers. And by the way, when you're on the website, up until I think tonight at about 11:30, 12 o'clock Central Time, that's tonight, Wednesday, my dollar report is still up. Then it's gone. Free access to the Linn trading platform. That's the one you see me use here if you'd like to try it. Plus, we have another one called QT Trade, which I use all the time too. It's like I use different services for seasonals and so on. Well, we do all that. Modern Trader, the profitable trading books that they put out, and the ways you go. You can't get these anymore, folks. So these are things that I think are from my private collection now that are just out there, and they're phenomenal to look at. Pivot points. How do you day trade? Indicators for time and momentum together. Very, very important. Try the Linn Associates research. Just a short trial, but boy, you're going to see something. If you're a grain trader, get ready to fall in love with something there because it is pretty important. So how you get this, you just go to iraepstein.com, free offers. When you're finished, they'll ask you to put in your name, your email address. We send everything out to you afterwards, all right? It'll come by email, and you'll be able to just download a link, and everything will open on your computer for you. You can put it in folders, whatever you'd want to do. I'm Ira Epstein. Hope we hear from you. iraepstein.com. If you move your cursor to the top here, you'll see an icon. Give it a click, and away you go. Take care now.